To get started, I would recommend that you get a completely free Gold IRA guide that is written by the best and most trusted Gold IRA company that I have found after over 20 years as an expert independent gold researcher. This free Gold IRA guide will explain everything you need to know and will also answer any questions you may have about Gold IRAs. This is the best guide I have seen in my lifetime as an expert independent gold researcher with more than 20 years of experience, and this is the best guide available anywhere, in my opinion. Also, when you get this free Gold IRA guide, you will get free access to the top Gold IRA experts who will provide you with personalized support and help over the phone, and they will answer any questions you may have. To get this top free Gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. So again, to get this top free Gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. This free guide is really worth getting. Simply go to the link that is in the episode show notes or go to the link that is in the episode description. Also, this audiobook is not financial, investment, or tax advice. For financial, investment, or tax advice, consult a financial investment or tax advisor and take full responsibility for any decision you make. Okay, let's start the audiobook. Build Retirement Wealth, Gold IRA, not just Bitcoin or crypto. In the rapidly evolving world of finance, the pursuit of a secure and prosperous retirement is a universal aspiration. As traditional retirement planning landscapes shift and new investment opportunities emerge, individuals are constantly searching for the optimal strategies to build wealth that can weather economic storms and provide lasting financial security. For a significant period, the conventional wisdom centered around stocks, bonds, and real estate as the cornerstones of a robust retirement portfolio. However, in recent years, the investment landscape has become significantly more complex, with the rise of alternative assets that challenge traditional norms and offer both tantalizing potential and considerable risk. Leading the charge in this alternative investment revolution are cryptocurrencies like Bitcoin and a vast ecosystem of digital assets. The meteoric rise of Bitcoin in particular has captivated global attention, painting a picture of overnight millionaires and offering the promise of escaping traditional financial systems. Coupled with the narratives of decentralization, technological disruption, and unprecedented growth potential, cryptocurrencies have undeniably become a compelling option for many, especially younger, tech-savvy investors looking to boost their retirement savings. Yet, amidst the dazzling allure of crypto's potential, a time-tested and historically reliable asset class has quietly maintained its position as a bastion of wealth preservation and stability: gold. While the digital realm buzzes with blockchain innovations, gold continues to represent tangible value, a haven in times of crisis, and a portfolio diversifier with a track record stretching back millennia. And in the context of retirement planning, particularly for those approaching their golden years or seeking a more balanced and secure approach, the Gold IRA emerges as a compelling alternative and arguably a crucial complement to the often volatile and speculative world of cryptocurrencies. This audiobook aims to delve deep into the world of retirement wealth building and make a compelling case for why a Gold IRA deserves serious consideration, not just as an alternative to Bitcoin and crypto, but as a fundamental component of a well-diversified and resilient retirement portfolio. We will systematically explore the following crucial aspects. 1. The siren song of crypto, understanding the allure and the risks. We will begin by acknowledging the undeniable appeal of Bitcoin and the broader cryptocurrency market. We will examine the reasons behind its popularity, the promise of high returns, the narrative of digital gold, and the excitement surrounding a new technological paradigm. However, we will also critically analyze the inherent risks associated with crypto, including extreme volatility, regulatory uncertainty, security concerns, and its relatively short track record compared to established asset classes. 2. The enduring appeal of gold, a time-tested store of value. Next, we will turn our attention to gold and its enduring relevance in the 21st century financial landscape. We will explore its historical role as a safe haven asset, its intrinsic properties as a store of value, its function as an inflation hedge, and its ability to provide diversification and stability to a portfolio, especially during times of economic turbulence and market uncertainty. 3. Unlocking retirement wealth. The Gold IRA explained. This section will provide a comprehensive understanding of what a Gold IRA actually is and how it works. We will detail the specific rules and regulations surrounding Gold IRAs, the types of precious metals allowed, the process of setting up and funding a Gold IRA, the crucial role of custodians and storage facilities, and the tax implications associated with this type of retirement account. We will demystify the process and showcase how accessible and practical a Gold IRA can be. Number 4. Gold IRA versus Bitcoin and crypto, a comparative analysis for retirement planning. Here, we will engage in a direct and detailed comparison between Gold IRAs and Bitcoin crypto, specifically from the perspective of retirement planning. We will analyze each asset class across key criteria such as risk and volatility, regulation and security, complexity and accessibility, historical performance and longevity, and liquidity and transaction costs. This head-to-head comparison will highlight the strengths and weaknesses of each option within the context of building long-term retirement wealth. 5. Building a balanced retirement portfolio. Integrating Gold IRAs and navigating the crypto landscape. Finally, we will move beyond a simple either-or scenario and discuss how to strategically integrate Gold IRAs into a broader, diversified retirement portfolio. We will explore how to determine appropriate allocations based on individual risk tolerance, investment horizon, and retirement goals. We will also provide guidance on how to navigate the cryptocurrency landscape responsibly, if at all, within the context of a balanced retirement strategy, emphasizing the importance of diversification and risk management. By the end of this comprehensive exploration, readers will gain a nuanced understanding of the role both Gold IRAs and cryptocurrencies can play in retirement planning, empowering them to make informed decisions that align with their unique financial circumstances and long-term aspirations. It is time to move beyond the simplistic narrative of crypto is the future and recognize the enduring value and strategic importance of gold, particularly through a Gold IRA, as a crucial element in building truly robust and secure retirement wealth. Number 1. The siren song of crypto, understanding the allure and the risks. Cryptocurrencies have undeniably revolutionized the financial world, capturing the imagination and investment dollars of millions globally. Their allure is multifaceted, stemming from a potent cocktail of technological innovation, disruptive potential, and the promise of extraordinary financial gains. To understand the appeal of crypto in the context of retirement planning, we must examine the key drivers behind its popularity. The lure of high returns. The most captivating aspect of cryptocurrencies, particularly Bitcoin in its early years, is the potential for exponential returns. Stories of early investors becoming overnight millionaires have fueled a fear of missing out, FOMO, mentality. Bitcoin's price surges have been nothing short of spectacular at times, outperforming traditional asset classes by a significant margin in certain periods. This potential for rapid wealth accumulation is naturally attractive to those seeking to accelerate their retirement savings. The hope of getting rich quick, or at least significantly faster than traditional methods, is a powerful motivator. The narrative of digital gold. A compelling narrative has emerged that positions Bitcoin as digital gold. This narrative suggests that Bitcoin, with its limited supply, capped at 21 million coins, its decentralized nature, and its perceived resistance to government control and inflation, can serve as a modern-day store of value, similar to gold. This resonates with investors wary of fiat currency debasement and seeking assets outside of traditional financial systems. The digital gold narrative taps into gold's historical role as a safe haven and a hedge against economic uncertainty, appealing to those seeking similar properties in the digital age. Technological disruption and innovation. Cryptocurrencies are built upon blockchain technology, a revolutionary distributed ledger system with the potential to transform various industries beyond finance. The decentralized and transparent nature of blockchain, coupled with smart contracts and other innovations, promises to streamline processes, enhance security, and empower individuals in ways previously unimaginable. Investing in crypto is often seen as investing in the future of technology, aligning with the broader trend of digital transformation and the belief that blockchain will play a significant role in the future economy. This futuristic appeal adds another layer of attraction, especially for younger generations who are more comfortable with technology and eager to be at the forefront of innovation. Decentralization and financial freedom. The decentralized nature of many cryptocurrencies, meaning they are not controlled by any single central authority like a government or central bank, resonates with individuals who are skeptical of traditional financial institutions and seek greater financial autonomy. The promise of bypassing intermediaries, reducing fees, and having more control over one's finances is a powerful draw, particularly for those who feel disenfranchised by the current financial system. This libertarian ethos and the promise of financial freedom resonate with a segment of the population seeking to opt out of centralized control. However, alongside this alluring promise comes a significant array of risks that cannot be ignored, especially when considering retirement savings, where capital preservation and long-term stability are paramount. Extreme volatility. Cryptocurrencies are notorious for their extreme price volatility. Bitcoin, while the most established cryptocurrency, has experienced dramatic price swings, with corrections of 50% or more being commonplace. This volatility makes crypto a highly speculative asset class, particularly unsuitable for individuals nearing retirement who cannot afford significant losses. Retirement planning requires a degree of predictability and stability, qualities that are largely absent in the cryptocurrency market. A sudden and substantial downturn in crypto prices could severely derail retirement plans. Regulatory uncertainty and evolving landscape. The regulatory landscape for cryptocurrencies is still in its nascent stages and is highly fragmented globally. Governments and regulatory bodies are grappling with how to classify, regulate, and tax cryptocurrencies. This regulatory uncertainty adds significant risk. New regulations could be implemented that negatively impact the crypto market, leading to price crashes or restrictions on trading and usage. The evolving regulatory environment makes long-term predictions and risk assessments particularly challenging. Security concerns and custodial risks. Cryptocurrencies are digital assets, and as such, they are vulnerable to hacking, theft, and loss of private keys. Custodial risks are also significant. Storing crypto on exchanges or in online wallets exposes investors to potential hacks or exchange failures. While advancements in security are being made, vulnerabilities remain, and the responsibility for securing crypto assets rests heavily on the individual investor. For retirement savings, the potential for irreversible loss due to security breaches is a major concern. Complexity and lack of understanding. The technology underlying cryptocurrencies, blockchain, and related concepts is complex and often poorly understood by the average investor. Many individuals invest in crypto based on hype and speculation without fully grasping the underlying technology, the risks involved, or the fundamental value proposition of the assets. This lack of understanding makes investors vulnerable to making poor decisions and falling prey to scams and fraudulent schemes that are prevalent in the crypto space. Retirement investing should be based on sound financial principles and a thorough understanding of the assets involved, which is often lacking in the crypto market. Limited track record and speculative nature. Cryptocurrencies are a relatively new asset class, with Bitcoin only emerging in 2009. Compared to established asset classes like stocks, bonds, real estate, and gold, crypto's track record is extremely short, particularly in the context of long-term economic cycles and market fluctuations. Much of the price appreciation in crypto has been driven by speculation and hype, rather than fundamental value or widespread adoption for real-world use cases. The long-term sustainability and stability of the crypto market are still uncertain. While cryptocurrencies may offer exciting potential and appeal to certain risk-tolerant investors, their inherent volatility, regulatory uncertainties, security risks, and limited track record make them a highly speculative and potentially unsuitable primary asset for building secure retirement wealth. Especially for those in their later stages of life or seeking a more conservative and predictable approach. It is crucial to understand these risks fully before allocating a significant portion of retirement savings to this volatile asset class. Number 2, the enduring appeal of gold, a time-tested store of value. In stark contrast to the relatively nascent and volatile world of cryptocurrencies, gold stands as an ancient and enduring symbol of wealth, stability, and security. Its appeal transcends generations and cultures, rooted in its unique physical properties, its historical role in monetary systems, and its proven ability to act as a safe haven during times of economic uncertainty. For retirement planning, gold's enduring appeal offers a compelling counterpoint to the speculative allure of crypto, providing a foundation of stability and diversification. A historical haven in times of crisis. Gold's historical performance during periods of economic turmoil, geopolitical instability, and market crashes is perhaps its most compelling attribute. Throughout history, when stock markets plummet, currencies depreciate, and economies falter, gold has often acted as a safe haven asset, retaining or even increasing its value. Investors flock to gold during crises as a store of value that is perceived to be less correlated with traditional assets and less vulnerable to the failures of financial institutions or government policies. This flight to safety phenomenon has consistently driven gold prices higher during times of uncertainty, making it a valuable portfolio diversifier and a source of stability during market downturns. Inflation, hedge and currency debasement protection. Gold has long been recognized as an effective hedge against inflation and currency debasement. Unlike fiat currencies, which can be printed at will by central banks, the supply of gold is relatively limited and grows slowly through mining. As a result, during periods of inflation, when the purchasing power of fiat currencies erodes, the price of gold tends to rise, preserving the real value of wealth. Similarly, when governments engage in expansionary monetary policies or currency devaluation, gold often benefits as investors seek an alternative store of value to protect against the erosion of their purchasing power. In an era of increasing concerns about inflation and potential currency debasement, gold's role as an inflation hedge becomes particularly relevant for retirement savers seeking to preserve their purchasing power in the long run. Tangible asset in a digital world. In an increasingly digital and intangible world, gold retains the fundamental characteristic of being a tangible asset. It is a physical commodity with intrinsic value, unlike cryptocurrencies or even stocks and bonds, which are essentially digital representations of value. This tangibility offers a sense of security and control, particularly for investors who are wary of the complexities and potential vulnerabilities of the digital realm. Holding physical gold, whether in bullion or coins, provides a sense of ownership and direct control that is absent in purely digital assets. This tangibility can be comforting, especially for those who value physical assets and seek a counterbalance to the increasing digitalization of finance. Portfolio diversification and risk mitigation. Gold's low or negative correlation with many traditional asset classes, such as stocks and bonds, makes it an excellent portfolio diversifier. When stock markets decline, gold often performs differently, sometimes even moving in the opposite direction. This inverse correlation helps to reduce overall portfolio volatility and mitigate risk. Including gold in a retirement portfolio can help to smooth out returns over time and provide a buffer against market downturns. Diversification is a cornerstone of sound retirement planning, and gold plays a crucial role in enhancing portfolio diversification and reducing overall risk exposure. Limited supply and intrinsic value. Gold is a finite resource with limited supply, and its extraction is a costly and energy-intensive process. This inherent scarcity contributes to its enduring value. Unlike fiat currencies, which can be created indefinitely, the limited supply of gold lends it an inherent value that is not easily manipulated or diluted. Furthermore, gold has intrinsic value due to its unique physical properties, its use in jewelry, electronics, and other industries, and its historical and cultural significance. This intrinsic value provides a foundation of stability and limits the potential for gold's value to decline to zero, unlike speculative assets that lack fundamental value. Longevity and proven track record. Gold has been used as a store of value and a form of currency for thousands of years. Its long and well-documented history provides a level of confidence and predictability that is simply absent in nascent asset classes like cryptocurrencies. Gold's track record spans numerous economic cycles, geopolitical events, and financial crises, demonstrating its resilience and its ability to maintain its value over the long term. This longevity and proven track record are particularly important for retirement planning, which is inherently a long-term endeavor, requiring assets that can withstand the test of time. While gold may not offer the same potential for explosive returns as cryptocurrencies, its enduring appeal lies in its stability, its role as a safe haven, its inflation hedging properties, and its proven track record as a store of value over millennia. For retirement planning, where capital preservation and long-term security are paramount, gold offers a compelling counterbalance to the volatility and speculative nature of assets like cryptocurrencies, providing a foundation of stability and diversification that is essential for building truly resilient retirement wealth. 3. Unlocking retirement wealth. The Gold IRA explained. Understanding the appeal of gold as a store of value is one thing, but effectively integrating it into a retirement plan requires a practical and accessible mechanism. This is where the Gold IRA, individual retirement account, comes into play. A Gold IRA is a specialized, self-directed IRA that allows individuals to hold physical gold, along with other precious metals like silver, platinum, and palladium, within a tax-advantaged retirement account. It offers a powerful way to diversify retirement savings beyond traditional assets and gain exposure to the potential benefits of precious metals. What is a Gold IRA? A Gold IRA is essentially a self-directed IRA that adheres to the same rules and regulations as traditional and Roth IRAs in terms of contribution limits, tax treatment, and withdrawal rules. However, unlike traditional IRAs that typically hold paper assets like stocks, bonds, and mutual funds, a Gold IRA is specifically designed to hold physical precious metals. It is self-directed because the account holder has greater control over the investment decisions within the IRA, choosing which precious metals to purchase and where they are stored. Types of precious metals allowed in a Gold IRA. The IRS has specific guidelines regarding the types of precious metals that can be held in a Gold IRA. Generally, only certain forms of gold, silver, platinum, and palladium that meet specific purity standards are eligible. These typically include gold. Gold coins and bars must meet a minimum purity of 0.995 fine, 99.5% pure gold. Examples include American Gold Eagle coins, American Gold Buffalo coins, Canadian Gold Maple Leaf coins, Austrian Gold Philharmonic coins, and certain gold bars produced by recognized mints or refiners. Silver. Silver coins and bars must meet a minimum purity of 0.999 fine, 99.9% pure silver. Examples include American Silver Eagle coins, Canadian Silver Maple Leaf coins, and certain silver bars produced by recognized mints or refiners. Platinum. Platinum coins and bars must meet a minimum purity of 0.9995 fine, 99.95% pure platinum. Examples include American Platinum Eagle coins, Canadian Platinum Maple Leaf coins, and certain platinum bars produced by recognized mints or refiners. Palladium. Palladium coins and bars must meet a minimum purity of 0.9995 fine, 99.95% pure palladium. Examples include Canadian Palladium Maple Leaf coins and certain palladium bars produced by recognized mints or refiners. It is crucial to ensure that any precious metals purchased for a Gold IRA meet these IRS purity standards to avoid tax penalties. Collectible coins or jewelry are generally not allowed in a Gold IRA. Setting up a Gold IRA, a step-by-step guide. Setting up a Gold IRA involves a straightforward process, but it requires careful attention to IRS regulations and working with the right professionals. Choose a custodian. The first and most crucial step is to select a reputable Gold IRA custodian. Custodians are specialized financial institutions that are authorized by the IRS to administer self-directed IRAs holding precious metals. They act as the intermediary between the IRA account holder, the precious metals dealer, and the storage facility. It is essential to choose a custodian with experience in handling Gold IRAs, a strong reputation, and transparent fee structures. Research and compare different custodians before making a decision. Open a self-directed IRA account. Once a custodian is selected, you will need to open a self-directed IRA account with them. This process typically involves completing an application and providing necessary personal and financial information. You will need to decide whether to open a traditional Gold IRA, pre-tax contributions, taxed withdrawals in retirement, or a Roth Gold IRA, after-tax contributions, tax-free withdrawals in retirement, depending on your financial situation and retirement goals. Fund the Gold IRA. You can fund a Gold IRA through various methods. Rollover. You can roll over funds from existing retirement accounts, such as traditional IRAs, 401ks, 403bs, or TSP accounts, into the Gold IRA without incurring taxes or penalties, as long as it's a direct rollover or completed within 60 days for an indirect rollover. This is a common way to fund a Gold IRA without additional out-of-pocket contributions. Transfer. You can transfer funds directly from another IRA account to the Gold IRA custodian. Contribution. You can make annual contributions to a Gold IRA, subject to IRS contribution limits, which vary annually. Select a precious metals dealer. The custodian typically works with a network of precious metals dealers. You will need to choose a dealer from their approved list, or potentially work with your own dealer if the custodian allows it. The dealer will facilitate the purchase of the IRS-approved precious metals for your Gold IRA account. When you are at this step, the custodian will provide you with the necessary next steps to take to get your Gold IRA up and running. This is why it is important to choose a custodian with a strong reputation. And that is how you set up a Gold IRA. Also, I would recommend that you get a completely free Gold IRA guide that is written by the best and most trusted Gold IRA company that I have found after over 20 years as an expert independent gold researcher. This free Gold IRA guide will explain everything you need to know and will also answer any questions you may have about Gold IRAs. This is the best guide I have seen in my lifetime as an expert independent gold researcher with more than 20 years of experience, and this is the best guide available anywhere, in my opinion. Also, when you get this free Gold IRA guide, you will get free access to the top Gold IRA experts who will provide you with personalized support and help over the phone, and they will answer any questions you may have. To get this top free Gold IRA guide, simply go to the link that is in the episode show notes, or go to the link that is in the episode description. So again, to get this top free Gold IRA guide, simply go to the link that is in the episode show notes, or go to the link that is in the episode description. This free guide is really worth getting. Simply go to the link that is in the episode show notes, or go to the link that is in the episode description. Also, this audiobook is not financial, investment, or tax advice. For financial, investment, or tax advice, consult a financial investment or tax advisor and take full responsibility for any decision you make. This is the end of this audiobook. I hope you enjoyed this and found it valuable. I would really appreciate it if you could please share this with everyone you know. All the best to you.